Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So this week was mostly inside one, and you can see that market stands in a tight range of the first it's for flag consolidation. Now it stands a bit out of the flag, despite that we've got some pullback on Friday, but we have discussed it in our video, and mostly we were correct that it should become it should get some technical features. It doesn't change the core of the current situation in the gold market, because if you think about the background, the mental background, so why actually gold currently stands depressed, and why we still think that it should drop a bit more to provide us better price for long entries around 18 even 1836. Just imagine what setup was previously and in what conditions gold market stands right now. So what we had previously? Previously we had no vaccine. We have uncertainty on the elections, and it was great stimulus expectations on the market. So, or better to say, expectation of the Biden victory. So while the gold shows rally and positive performance, but now the short-term sentiment has changed, as it has got a significant hurt. First, it was the Pfizer announcement, then the Moderna announcement. Now, stimulus is lost somewhere in the future. We do not know who will adopt it, in what manner, in what amount it will be provided. And the big role here is played Steven Mnuchin, who said on Friday why in general we've got this volatility on the gold on Friday. So he said first to Jerome Powell that the Fed program should be a stimulus program should be over by end of the year as it was planned, and that was negative sign for the gold and in general in other markets as well, because it suggests less stimulus from the Fed. At the same time, at the same day, and it was first that he said in relation to the Congress and Senate's discussion of the stimulus, that this stimulus should be adopted. So actually he's repeat what he has negotiated with Pelosi concerning the stimulus, that they will be adopted someday. The negotiations should continue and so on. So that's why first we've got some spike up, some rally, but then when he said give some comments to the Jerome Powell on the stimulus, market pulled back down. So you could see that in the short-term situation, the major factors that supported gold and hopes for gold to rally up a bit higher, now all these factors mostly, well, let's say that they have become weaker. Not eliminated, but still it has become weaker, which suggests that in a short-term perspective, gold has no real drivers, no reasons to show bullish reversal. Maybe if something outstanding as usual will happen in this case, it's possible, but currently we do not see anything of that sort. At the same time, although we do not currently, it's hardly we could believe in Donald Trump resurrection in the political arena, but well, we think that this risk is too early to take off of the table. And if this will become more real, it also will press on the gold. Also, in our weekly report, we have considered the longer-term perspective, which says moderately bullish, but in the second half of the year, we suggest that gold will turn and will be driven by classical economical factor, because it will depend on the recovery. It will depend on inflation pressure, it will depend on the Fed policy, and all this stuff is based on statistics. And close to the end of the year, gold returned back to the major driving factors that it usually follows in common conditions. Just for information, I tell you that Goldman Sachs, for example, expects 2,300 level by the end of the 2021 on the gold. It's approximately, if I do not miss something, somewhere around 90% annual performance. So not bad forecast. So moderately bullish situation stands on the gold for a longer term perspective. But in the short term, as I said, we have reasons to suggest that market really could drop a bit more, provide us better entry price. So technically, we have few extensions and great support area. So we already talked about it. So confidence support, daily oversold. If we'll take a look at the weekly chart, you will see that this is weekly oversold as well. And we have two different OPs. First OP, as you can see, based on initial ABCD action. Second OP, you could get it if you will take this extension. This will be approximately the same destination points. You can see market stands around 1836 for this OP target. So it's just a drop down. And that's the reason why we need to wait a bit more, at least if you have the bullish view, and do not hurry up with this, and be patient and wait when the market will reach this level. Another interesting moment that take a look on Friday, market was able to return back inside of the flag, but it has failed to do this. This is also bearish sign and suggests that the breakout of the flag probably is correct. It's not fake, and well, stands in favor of possible downward action on daily chart. Also, do not forget that this action up and down on weekly chart has the shape of the bearish engulfing pattern, and in fact we have another some kind of the ABCD pattern to the downside. And finally, we already talked about it, as gold usually never leaves behind juicy stop orders that stands below major levels. It mostly could be an exception rather than rule of thumb. When gold turning up without grabbing the stops below the important levels, it means that at least some spike here, washing rays or something of that sort around 1850 should happen. But I hope that it will be more gradual downward action right to this level. On the 4-hour time frame chart, this mostly indicates the same flag and that market has failed to return back here. On the hourly chart, take a look what we have. So, as we don't have any reasons to cancel yet our bearish short-term view, the butterfly that we discussed is still valid, so you could keep short position with it. Those of you who have taken a risk and decided trying to sell this action, as you can see, this card is cheaper to sell right at 1881 has worked perfect. So ABCD is completed here, and you have taken shorts, well, probably you also currently could move stops to the break-even. This pattern also provides another minor ABCD pattern, but mostly has the same target around 1832 area, so inside ABCD. That's actually all that we could say about the gold. So for bearish traders, you could hold positions if you already have it. If you do not have and you would like to sell, you will have to wait for some continuation patterns as this has happened on Friday. So that was previous ability to take short additionally to the butterfly. So let's see, maybe next time we'll also get something of that sort on the intraday charts. For the bulls, it's time to wait. So do not hurry up with this. And well, this is great price if we will get opportunity to go long around 18 even 1830 area. Should be nice pullback out from this level, even based on the pure technical reasons. Double oversold, strong confidence support, agreement. So that's deserve some at least technical response, technical respect to this level, and that should be a good opportunity to buy gold with a relatively low risk.